Welcome back. At long last, the day has finally come where we're going to solve the stock markets without the 4S data. So your base tick stock. And I'm going to open two files. First, I'm going to grab I have stock ticks, and then I'm going to grab just a test file. I'm going to do all of my coding in this test file instead of in the main logic because, well, I have 4S and it'll break if it knows I have 4S, and I don't want to deal with that. So we're just going to prove that it works on its own as a new file. So there's going to be a few things we need to do. Our first goal is going to be we have to detect when we have to predict the stock's future outlook. So a forecast. And I'm probably just going to lay all these out before I do any actual coding. Probably going to be pretty easy to do volatility. And we'll want some kind of standard div. Call it std div. And then we'll want like expected value. That's a pretty good start. How are we going to calculate the forecast? Honestly, I have no clue. We're going to need a history, aren't we? Okay, that's a good start. We'll hold on to that. We'll figure out how to fill out this history before we come back here. All right, in the main loop. And instead of setting a specific value, I'm just going to do like a sleep time variable. I'm going to do some tick times in here. These are just standard values. They'll allow me to detect when a tick has occurred so that I can update the history. And then we're probably going to want like an await here. Going to want to build out a list of stocks. You guys know the common way to do it. I'm actually going to create a function here in stocks ticks, so I don't have to keep typing this. It's going to be an exported function. Called get all tick stocks. It's going to return the stock array. Let stocks equals new array. Let s of stock list. Stocks.push new. Done. Need to get stock list. Whoops. I got that somewhere. All right, so we've got our stocks, our array of stock objects. And then we're going to want to do something like if as tick occurred. So we'll need a function. As tick occurred. And how are we going to detect if a tick has occurred? I've got an idea. Let's pass in stocks. And then we'll return the sum means return true if any match this Boolean. We'll say s dot has ticked. We'll come back over into our stocks and say get has ticked, and we'll define has ticked as return this dot price. Which price do we want to use? May do an average price. Yeah. That'll actually be more likely to detect a tick like that, because then either of them changes. And it will change. Okay, so this price average is not equal to this dot price, this dot last price. Do it like that. So then we'll need a function where we set this dot last price. We'll call that do tick something. I'm not gonna call it do tick. I'm gonna do on tick detected. It's a little bit more descriptive. So when we detect a tick, first thing we're gonna do is set this dot last price. Then we'll know if a tick has occurred. Let's just test that in stdtprint. Oh, I forgot to import it. Always remember to return. All right. Okay, so that's detecting a tick every second. That is definitely not right. Oh, well, that's because I never called. The on tick detected. So when a tick has occurred, I'll do stocks.forEach. And we'll just make sure that that function's getting called. That's much better. Should be about every 6 seconds. Perfect. Okay, then maybe what else we would want to do is like do something with the history. Probably prepend it with this price. And then we want to set some kind of upper bound for the length, because we don't want history to run on forever and be like 4,000 entries long, because we only really care about some number. Upper bound history length. Sure, why not? I don't know, I think I used 151. That's 2 full market cycles. All right, so what we're doing so far is setting the last price to the average price, unshifting the average price onto the history stack, and then if we need to slice off some extras, like if this becomes 154 entries long, it'll slice from 0 to 151 and put that back into history. So if this is under 151, it'll just work. Won't do any slicing, but if it needs to slice, it will. So that'll hard cap the length of history to upper bound. Okay, now that we've got history, I guess we can do something with the forecast. Probably want multiple forecasts. We'll want like a near term and a long term. And for the actual forecast, we'll just return that's good enough for now. What are these going to be? Long-term forecast. I think the key is going to be for both of these to have some kind of like a calc function where we send in a history variable, but we could also default to the entire history. Yeah. So this is like a sliding window function, super common. So we'll probably want like a near term window length and a long term window length. I don't know. I'm just throwing numbers out there. We'll figure out if it works later. Maybe 76. That's one more than the market cycle. Let me just put in market cycle. That's a known value, how often the market is liable to flip on you, at which point you'll have to detect the flip and react to it. It's every 75 ticks. Okay, and then to calc forecast, I think that's as simple as like, we just take the number of positives over the total number. I don't know. I'm going to leave that one. Let's see what else we got. Volatility. How are we defining volatility? How does the game define it? Because we want this to match up as much as possible. I think volatility is the how much you expect it to move in a tick. And so the volatility would be equal to maybe the maximum movement that we've ever seen. I don't know. I'm gonna have to think about this or find some math somewhere. Standard devs, more math. Expected values, more math. Let me see if I can dig up the math that I used. What is price? Got a price variable in there somewhere. Oh, price is right there. Never mind. Don't need any of this. Problem is, I'm not sure if these formulas are accurate. Not like actually accurate, because I didn't understand them. I just found them. Maybe we can figure out if they're accurate. So we're reducing whatever we pass in. And we're sending, for our reduce function, this is the accumulator, this is the price, and that's the index of it. If the index is equal to 0, then we return 0 as the forecast. That makes sense. Otherwise, we check the previous index. And if that's greater than the price, then we accumulate 1. Okay, otherwise we just return the accumulator. That's perfect. That's literally what I said. Like the sum of the integers or the sum of the numbers where it's greater than, or it goes up, divided by the total. It's literally exactly what that gives you. Over history length minus 1, perfect. And then volatility. It's taking the absolute value of history minus price over price. Okay, and it's not actually adding the accumulator, it's just taking the max of max. So this is the max movement of all time. Because it's comparing its previous max that it's gotten to every other item, the index minus the current price, like the last price minus the current price over the price, gives you a percentage. Okay, I'm pretty happy with that. Standard dev. We're going to square root something. Okay, so we're square rooting all of this. So the forecast times 1 minus the forecast. What is that? That's got to be a function I know. That doesn't look like the standard dev function though. Oh, probable window length. That's your n values that you're considering. I don't know, I'm rusty on my statistics. All right, let's just grab that function as well. And last inversion tick, that's dealing with the inversions of the markets. You can tell I've written these functions before. So we got to set last inversion tick equals 0. And then that'll be good. And that'll be good. Okay. I'm going to leave expected value for now. Let's see if we're actually calculating forecasts. Probably the best way to do that is to just run down here. Let's import pretty table. Okay, that's your basic pretty table format. Now we just got to figure out how to populate rows and headers. Think ticker, forecast, and actually I have real because I do have the 4S ticks data, so I can actually get the real to compare my results to. And we're going to have to loop through this for let's stock of stocks. And for every stock, we're going to push a row with the ticker, forecast, and then s.stock.getForecast for st.ticker. We'll have to informat these. Beautiful. Since we're printing something, we'll have to also clear the log. Yeesh. Something's not right. I think I put my pretty table backwards. Much better. Let's sort these stocks. Right at the point where we get ready to print it. I'll probably sort them differently earlier, but just for the print, we'll do sort, and we'll sort them by, let's sort them by this. That way they'll definitely be in perfect sorted order, as in the real forecast will have the top rank here. All right, I'm going to give that just a minute to potentially converge around some reasonable structure where it looks like the forecasts are right. It's looking pretty good. Like if you look up here at the top, we've got a bunch of 0.8s, 0.7s. Look down here at the bottom, you got 0.2s, 0.125s. But most likely our history is being created accurately and the forecasting is working. Now, the hard part. we need to detect when market cycles occur, because eventually this will flip. This will go from 0.668 to 0.3. And instead of waiting for our history to, you know, statistically reduce, which could take a very long time, we need to detect that flip via the near-term window variable that we created earlier. And then identify at what point in the future it's likely to flip again, which will be 75 ticks later. Okay. Has cycle occurred? Okay, so if his has tick occurred, then we're going to update ticks to update the stocks with our on tick detected. And then I don't know if I want this to go inside or outside the if block. Probably inside. We only want to consider if a cycle has occurred when a tick has occurred. Otherwise, we'll be like buying stocks in the middle of ticks and stuff. How are we going to define if a cycle has occurred? Well, I'm leaning towards doing something similar to this, sticking it on the stock object itself. So we've got the function has ticked. Let's run down to the bottom and do has inverted. And then we might want, because this is like a little sketchier than has ticked. Has ticked is obvious. If it's ticked, it's ticked. But has inverted, not all of them invert at the same time. And more specifically, only 45% of the stocks will invert at any given market cycle. So just detecting if detecting if any stock is inverting will not be accurate, because that does not mean a market cycle has occurred. We might have just had a run of bad luck. And it will think, because it's doing forecasting, that that run of bad luck will continue. But unless we have some critical mass of stocks that invert at the same time, we don't want to call it a market cycle. But we maybe could use it to influence whether or not we think there's a market cycle. I know I have a function here that's crazy math, which detects an inversion, but this by itself won't get us there. I need to create inversion detection. We'll make it 10%. So what this function does is creates a tolerance over to number, which is basically means it can go either way. It can either invert positively or invert negatively. So you divide it by 2. Then it does a bunch of stupid math. It adds the tolerance to 0.5 and P1 gets passed in the forecast, and it says, okay, is that? Then it subtracts it and does some other stuff. Anyway, it's complicated math. This by itself won't get us to has this stock inverted. This will just allow us to detect an inversion between 2 numbers. But we will use that function in has inverted. So half of what I'm doing here is reading a script that wasn't ever finished. And half of what I'm doing is trying to figure out how to make it better. I've got this. This calls detect inversion, and it passes in something called pre-near-term window prob and near-term forecast. We've already got near-term forecast, right? That's this guy. History length, that looks good. And we're using a different variable here. Lower bound history length. And this is basically the minimum. I don't know what that should be. The minimum number of ticks before we even consider detecting an inversion. I don't know what's a good number. I'm just going to say 21. It's like a third of the total cycle. Then I got to do something with this pre-near-term window prob. If I remember, that was just another forecast. But I got to figure out if it was any good or not. Yeah, it was just a forecast. Okay, so we're calculating a forecast on slice. Wait, what? So I'm declaring a start, but not an end. I'm starting from near-term window length and slicing all the way to the end. That don't make much sense. Oh, okay, I got you. So I don't have it. I was thinking because history is prepending variables, but this is actually the opposite of what we want, I think. No, okay, it's pre-near-term window. So we've already got near-term forecasts, and this is the pre-near-term. So this is just before what we call near-term forecast. So near-term forecast is your last 10, and this is 10 to 20. Or really this is 10 to whatever. And so we're detecting the inversion by comparing the pre-near-term probability, so the old probability, with the new probability. And we're saying if that's true, if we can detect an inversion with that, and the history is longer than lower bound history, then we will return true for has inverted. Got it. Now we can get back to what we were talking about, some kind of critical mass. And probably the best way to do that is to do a reduce. We'll do just a sum of has inverted. This will give us the total number of stocks that consider themselves inverted. And if that total number is greater than some threshold value, call it 6. If it's bigger than the threshold value, we'll consider it inverted. All right, so from here on out, we should probably set what was has cycle occurred again? Oh, okay, this is supposed to live up here. This is determining whether a cycle has occurred. And we will know a cycle has occurred by whether inverted is greater than inversion threshold. And down here is what we'll do, where we'll say if we have experienced an inversion, do stuff. And for now, it's just going to be inversion detected. Is there anything else I need to do in here? Let's just run it. See if we ever detect any inversions. What I want to make sure up front is that I don't detect an inversion before 21 ticks, or before like 6 ticks, and then I'm going to assume I won't detect one before 21. Yeah, we're pretty good. Now, what do we want to do when we detect an inversion? Well, specifically, that's going to tell the forecasts to essentially start a new forecast at the point of the inversion. So we're somehow going to have to get this, what I might call an aggregate data, where you're looking at all the stocks, reducing them, and determining if they've reached critical mass. You're somehow going to have to get that data back into the individual stocks. And I'm not sure what we're going to do with that. And let me just check and make sure that, yeah, we haven't had any inversions detected, but we're only at like 20 now. Give it a couple more and see if it detects one. Because it should be coming up here pretty soon. You can actually see the inversions because like MGCP will go from 0.68 to 0.34. It'd be cool if we could just get it to pick that up one time. It'll also be really obvious when a cycle has occurred because the list of stocks will shift dramatically. Like everything will rearrange itself. So you won't have MNCO at the top 4. You'll have like UKFE. There we go, inversion detected. What inverted? Oh, there's another one. That's not good. Shouldn't have been 2 inversions. And I'm not really seeing an inversion. Everything looks to be pretty standard. Okay, so something's wrong. Maybe the inversion threshold's too low. So if there's a 45% chance on every cycle that a stock will flip and there's 33 stocks, that gives you like a, what, 14, 15 stocks will flip on your average inversion. So let's bump up inversion threshold to 8. And then also, if we detect an inversion, we will change inversion threshold so that it'll be harder to detect the next one. And I'll set the max to like hard cap a max. It should never go over 15. So even if we were to detect an inversion at 15, it would be set to 15. It wouldn't go up to 16. Oh, actually, that's wrong. I was going to pick the max of those. Okay, so now the inversion threshold after an inversion. I like that better. So the number that inverted plus 1 or 15, whichever is lower. So if we get 9 inverted, then the threshold will raise to 10. And if we get 22 that inverted, then the threshold will still be 15. That seems pretty logical. Then maybe I'll drop this back down to 7 because it'll climb up real quick. Yeah, we're getting a ton of inversions in here. Okay, what else we got? I guess if we have detected an inversion, let's do something like cycle tick. Then maybe cycle has, just do cycle detected. Start that off as a false. And if we've ever detected a significant inversion, we'll say cycle detected equals true. These will have to be lets, not consts. Cycle tick equals what? This dot tick. Probably can't do that in this function. Probably have to break this out, come back down here. And then we'll need a current tick. So every tick will say current tick. Just increment it. And then if a cycle has occurred, cycle tick is current tick. Seems good so far. Wait, what just happened? Script crashed. Why? I didn't get to see my error. Well, we'll figure it out eventually. Okay. What's next? Let's do some kind of detection here on has the tick occurred, because we want to make sure that, like, we set up this expected tick time and accelerated tick time. We want to make sure that we're detecting if we're under accelerated or expected. Not that it matters, but may do like actually I don't care. I'll probably just delete those. I don't see any reason why we would need to know whether it was a fast or a slow tick. But I may come back later and eat my words. Now what's interesting is this here, cycle tick equals current tick. Now we're just continually incrementing current tick. But we are on a cycle, so it doesn't need to increment forever. It really should be current tick something modulo 75 so that it resets back to 0 on cycle tick. I'm not sure exactly how I'll structure that yet, but keep that in the back of your head that I'll come back and do that later. And then there's this other bit that's bugging me, which has to do with this here. Like, think, let me see if I can explain this. Here's what's bugging me. As inverted doesn't trigger until we detect the inversion by comparing this, which is 60 seconds ago, with this, which is recent. So that means by the time we detect the inversion, we're most likely 60 seconds away from it. You follow me? So like if we were to set the cycle tick to be the current tick, we would be 60 seconds, 60 ticks off, or 10 ticks off. So instead of setting it to current tick, maybe there's a bunch of different ways to do this. I'm going to try it this way, or I grab this guy, this constant out. I'm just going to see if this works. I don't know if it will. We'll set it to near-term window length, and that'll tell us how far to look back. And then current tick, we will do current tick equals current tick plus 1 modulo 75. So we're ticking along. We go 1, 2, 3, 4, 5, 6, 7, and it goes 73, 74, 0, rotates back to 0. And we have cycle tick, which is set to, it's just hard set to 10. But really we want to hard set this to current tick minus near term window length. And then the cycle tick will be the number of current tick where we expect to see a cycle. So we can be like, if the distance to a cycle is equal to cycle tick minus current tick. Maybe we just type that out. And I'm not even sure if that's going to be accurate, because cycle tick could be like 2 and current tick could be 75 or something. That would return a negative. So maybe it's, how are we going to do this? Maybe, for now I'm just going to leave it like this because I don't even know how I'm going to use it. But probably what I'll want to do eventually is set cycle tick to be the 0th tick, and then set current tick to 0 at cycle tick. And then I'll just count up to 75, and at 75 we know we're approaching the cycle. Okay, and when the cycle has occurred, yep, we're setting that stuff up. What else? What else? What else? Feel like we're not ready quite yet to say, okay, let's just start buying stocks. But we're getting close. Make sure the math here is right. As inverted is detect inversion from those values. Okay, yeah, I don't mind this. Now, the problem remains how we're going to get the tick number of cycle tick back into the forecast. We're not using last inversion tick for anything, are we? I think this is where it happens. Prob window length is long-term window length over is the smallest of last inversion tick and long-term window length. So it's max 76, but then if last inversion tick is 14, then prob window length is 14, and somewhere up here, I think we use that as a calc. In fact, I think we use it here because this is already, it's duplicating this variable, but this is actually reducing this variable further. So I think long-term forecast, if we set it to that, then we will be getting the better of, the more accurate of long-term window length and last inversion tick, which right now is just always set to 0. The challenge I'm having is there's 2 values that are in the first script that I've got to get into the second script. So in the test, we've got these 2 items, current tick and cycle tick. And over here, we want to store those items. I'm not sure if we want to store them as like globals, where all the scripts, all the stocks have the same expected last cycle tick, or if you store them independently so that stocks decide their own last inversion time. And there's pros and cons to each. The pros is that if stocks are determining their own and storing their own, then it would be likely that even if you missed this number here, if you missed has cycle occurred and you like got it wrong, if your inversion detection failed, then the stocks would be operating kind of on their own preferences. Based on their own forecast, they'd be like, oh, well, I've recently inverted, so let me expect another one to be coming up. The other side of that is if you get this right, then you don't want them to operate on their own, do you? Because they're not guaranteed to invert. And that's what's really, like if I was to say, if we hit the inversion threshold, then everything's going to invert, and start calculating your forecasts again. If I was to just assume that, then you would have 55% of stocks that didn't invert. And so they wouldn't fit the model that we know exists with the stock market. I think I have to do it independently and let them figure out for themselves if they've inverted. And I might do that here in on tick detected. Maybe I'll pass in like some hint, like this is when we think you're going to invert. Yeah, let's do that. So we'll start with just doing if this has inverted. Then we'll set this last inversion tick to whatever value to something. Not sure what we'll set it to yet. Else, we'll just increment last inversion tick. So now we need like a cycle tick like we had on the other script, which we can increment here. And I probably want to do it exactly the same, which was that guy. This dot cycle tick is equal to this dot cycle tick plus 1 modulo 75. All right, so we're setting the cycle tick and incrementing it every time we detect a tick, but it's wrapping at 75. Then if we can detect an inversion, we will set the last inversion tick to cycle tick. So we'll know that the inversion comes on, 23, tick 23. Otherwise, we just keep incrementing last inversion tick. Curious how this has been going. It's been running for a minute now. A lot of ticks detected. Oh, I saw some inversions detected too. That's good. And not that many. That's really good. And look at how accurate our casts are. That's like 1-to-1 perfect all the way down till you get to here. I'm digging this, and it's even accurate at the bottom. So I think our inversion detection is actually working, because otherwise these would be way off. Let's hop over into our test script now that we got all this new data. Let's add some junk to the printout. What else do we want to know? Well, we're calculating. What are we calculating? Maybe this? That's kind of cool. Is that what it was called? Anything else we want to know? We'll try has inverted. Just cause. Ooh, and then we could do like a plus plus or a minus minus or something like that to tell how strong it is. Actually, let me just, instead of doing that, I'll just do bullish and bearish because I was going to do that anyway. Just two real simple functions. Throw them right here. Get bullish, get bearish. That'll be our bearish limit. That'll be the bullish limit. So if it's bullish, we'll print bull. And if it's not, if it's bearish, we'll do bear. And we'll just do, I don't know. Call that deer. Very surprised that our stuff is so nicely matched. That's a really, really good sign. So the bull and the bear designations won't mean anything until we get up to, until we detect a cycle. Ooh, that's another thing I could add. Before we get too deep into this, I will print market cycle detected. And we called that cycle detected. Then we'll do current tick. Now we'll be able to tell when our market cycles. Ooh, I'll do one more. I'll do inversions detected. And we'll do it using this stocks reduce function, so we'll know at any given time how many inversions there are. And then we'll do ns.print inversion limit or threshold. Yeah, that's a ton of information. That'll help a lot in the last stages of debugging this. Surprisingly, there's not a lot of debugging to do. It seems like it's just working, and my debugging is just verifying that it's working. We expect our first cycle tick to be at, well, if it's buggy, then at 21. We would not expect to see a cycle tick at 21. That would, I mean, we could. It would just be unlikely. 21 is, of course, the minimum that we could see it at. And the reason why it's 21 is because that's 10 plus 10, and 10 is our near-term window, and the 10 before that is our kind of long-term window. So we could detect it technically as early as 21. We couldn't detect it at 15. That'd be impossible. But we would expect to detect it, you know, like 35 or 50, because there's no reason why it has to happen literally as soon as it's possible for it to happen. And if it does happen at 21, I'm going to kill this script and start it again immediately, and then hope it doesn't detect at 21 again. Okay, so we got past the 21 bar, still haven't detected the cycle, that's good. We got 4 inversions there on 1 tick, potentially, but then they disappeared immediately. And we got 4 more, but they're all kind of right next to 0. Now that's probably an inversion. Let's see if it catches it. Come on, come on, come on. No, it missed it. That was almost certainly an inversion. Look at that. It went from 0.4 to 0.8. There we go. We got it there. We got it a few ticks too late. Actually, we didn't get it a few ticks too late, did we? Because we then subtracted from the current tick 10 cycle tick. Huh. That might actually work. Right now we've still got 10 inversions detected though. And if it was using this new cycle tick correctly, you would think that, like, because I guess it hasn't detected an inversion on that yet. For some reason, it's slowly creeping its way up to it. I don't know. We'll run through one full loop, 75. I'll hush while we watch it work. And hopefully when it comes back around, actually I'll let it run through 75 and then back up through 26 and see if it actually detects, you know, 10 or 12 inversions and treats it as a new cycle and starts adjusting much faster to accommodate the real value. Because that's the target. Remember, if we're hitting pretty close to real, then we've got an accurate script. That was weird. Whatever's happening now, I don't like it. There's a problem with the windows. Let's let it wrap all the way around and see if it fixes itself. I'm worried that if it is this out of sync, though, maybe it's being more accurate. I don't know that it's necessarily bad. Maybe all the 76s are inaccurate because it couldn't detect something. I don't know. Okay, there was the inversion, 100%. So we're still 5 ticks off. Detected 8. I feel like there were more than 8. Let's see how quick ECP adjusts and stops being... Well, it's already been determined that that is an inversion. That's good. But it hasn't determined that now it is a bull market. It sure is climbing quick. Okay, so our cycle tick did adjust. It dropped by a couple more. So it's getting more and more accurate. That's brilliant. But the forecast is not updating. Why is the forecast not adjusting faster? It's like it's still using the old forecast. So let me make sure this .forecast is actually using long-term forecast, which is the most recent to prob window length. Oh, but the window length on this is 46. That's no good. That's assuming a 0 tick time. Yeah, because the window length on this should be 20, 30. Basically, whatever the window length, the current tick is minus cycle tick. So maybe it's this right here. I'm kind of mixing up my metrics. I've got cycle tick, which is ticking up 1 per, as it should. And maybe instead of doing this, yeah, because this is definitely not what I want to use. We know that cycle tick is going to match cycle tick, and we know this cycle tick is very accurate. And we know current tick is very accurate. But window length is inaccurate, and it's inaccurate because it's not current tick minus cycle tick. So we are passing, we sent, I thought at some point, I guess we never sent that data back into the stock object because it's just not, it's not here. Okay, so let's do that. If an inversion is detected, stocks.for each. and we know cycle tick is being set accurately. This is actually a little confusing. This should be current. And last inversion tick, I'm going to call cycle tick. The only place that's used is in prob window length. So instead of using cycle tick, what we want to use is current tick minus cycle tick. Now let's give that a whirl, see if we get better accuracy. Because I'm really happy with how accurate this stuff out here on the front end is. But the stocks don't seem to be getting that data and using it appropriately. And I'll just confirm while that's running. So we're doing the long-term forecast as 0, which is the most recent value, to probable window length, which is the smallest of the long-term window length, which is 76. So it'll never be higher than 76. And then current tick minus cycle tick. So if current tick is ticking up and it's like 60 and cycle tick gets set at 19, then it'll be a window of 41, which should be perfect. Should be. I think when this says 000, that's actually 1.000. I don't have the 1 displaying because it's not, you never get a true 1. I think it's just never gone down. Okay, so we got 6 inversions detected. But I don't think that's a real tick. I think it's the inversion threshold of, ooh, was that a real tick? I mean, it must have been. There were 9. The 2 I was looking at didn't invert though. Okay, and the window is still wrong. The window should already be saying 18 for all of them. Oh, god damn. I'm retarded. Didn't actually do the code. Okay, so now we're passing in cycle tick and it's calculating current tick already. And the number we're watching here is the window number, which should always match for every stock, in fact. Current tick minus cycle tick. There might be an edge case or something I haven't looked at where it doesn't match, but I think it's always going to match because I'm just sending these values in and then never changing them. Still hasn't detected the tick. That's good because I haven't seen it either. All the way up to 39 and no false positives. 7 seems like the right number there for the inversion threshold. It definitely has not inverted yet. It might have cycled. Now, a cycle does not necessarily mean there's an inversion, but most likely there's going to be a detectable inversion, especially with a threshold at 7. And it'll probably come up here in just a few seconds. Remember, after it actually inverts, after the cycle happens, we won't know it happens. The script won't know it happens for 10 more ticks, but I'll know it happens immediately because I'm watching real. And as soon as it inverts, these change. But the script doesn't have access to real because that's the 4S data. Okay, so it thinks it saw a tick on 39. It's fairly confident it saw a tick on 39. It got a threshold of 10 out of that. Might have just missed it. I was watching the two biggest and the two smallest. Neither of those moved. But our logic's working. We've got a window of 22. It's exactly what we want the window to be. And how accurate are our numbers? Well, those are all saying bull, and those reals are all bull. That's a real bull. Bull, bull. Saying that's a bear. But it's saying all those it's hitting the top 5, top 6. I mean, look at that. Can't do much better than that. Okay, I think we go with this. I'm going to let it loop one more time through. I'm going to start coding while it's doing it. But I expect to see that maybe the cycle tick adjusts by 1 or 2 more on the next time through and probably stays pretty accurate. The key is when it inverts, how quickly it recovers. And ooh, that's not good. That's not good. That's very not good. Because if that goes negative, then your probable window length becomes negative, which means your slice becomes negative, which means it slices from the end, from the oldest values. That's not good. Okay, so we got to make sure that this never resolves negative. Easy enough. We'll just set the min to be that right there. So it takes the minimum of the long-term window length or the maximum of current tick minus cycle tick 10. So that's fixed. Don't have to worry about that. Surprisingly, the numbers are still accurate. I don't know how they're being that resilient. They should be just going crazy. Anyway, let's do our expected value real quick, because now we know our numbers are accurate, and I've got the expected value function already. The reason why we're doing expected value is because that's going to be our what we purchase stocks by. So we're getting into the let's go and buy some stuff section of the code. Okay, so if the cycle has occurred, Actually, we don't need to only buy stocks when a cycle has occurred, but we do need to buy stocks when a tick has occurred. We'll put it here. And we never want to buy stocks until we detect a cycle. So if we've detected a cycle, we will stocks.sort. Sort by expected value. And then stocks.forEach. Let's do filter. Oh, and then we also need to sell our underperforming stocks. So if the outlook is bearish and we have bull positions, we will unbuy. Okay, so the math is actually working perfectly, except for that negative. The window is 12. The tick happened 12 or 14 ticks ago. The cycle happened, and our numbers got really, really accurate there. So that's good. Now let's kill this. Now the window is set to minimum of 10. I don't know, that might actually break like the inversion detection to have it just hard set to 10. We'll find out when we start buying stocks. Let's make sure we got money. We got money. What? Like, it's called max long. It did try to buy something. So it must have thought it detected that inversion at, I saw that it hit 7 inversions detected, which is the threshold. I didn't think that an inversion had happened. But that's why we got the scripts, because code knows more than I do. I'll talk about accuracy. Yeah, if this makes it through one loop, so scrolls up, finds a cycle, loops through, comes back around, hits that cycle again, and at some point in that cycle buys a stock. I'm going to pause the video, let this run for a couple hours, and come back and do like a follow-up and figure out how much money we made. And if we lost all $650 billion not, because our script sucks. I think we're going to be pretty good. And then when we come back, I know we're already an hour and a half in, but this is the hardest video to do on the stock market. We will implement this script, this test script that we've been working on, into our main script. But for now, we'll just watch the numbers tick up. All right, without further ado, we're back with the results. It's been working great. It's been going for about an hour and a half. It's got a couple of small tweaks that could happen to it that would make it a little bit more efficient, but it's really not anything I'm going to worry about. The one change I did make, where did it go? This right here is actually, I think, the right function. The modulo operator should make it so that that never becomes negative. I haven't actually seen a chance where it could have. I guess we'll see one here in a couple of seconds. But either way, it seems to be working even when it's negative. I don't know. I don't know how to describe it. It's like I'm making a ton of money. I'm up in an hour like $350 billion, which is as good as I could have hoped for. So we're going to jump straight in to applying what we've done here into the main script, just so you can see how that works. And then also I'm going to have to make some changes to like the 4S ticks so that it matches some of these other functions. But we'll just open up our original script. Okay. I'm going to have to reorganize this just a hair, I believe. This right here is not a big deal. This stocks push, we'll keep all this in. What you're going to want to do, actually probably an easier thing to do, is have it somewhere up here. Have like a const. We'll call it stock object, and we'll say that's going to be equal to 4 sigma tick stock. How do I want to do this? So in the real world, what you would do is, you know, if we have 4 sigma stock obj 4 sigma ticks, right? But the problem is we want to reduce the amount of RAM usage. So I don't know if there's a good answer. I think probably just declaring it. And then if you ever wanted to get rid of the RAM, you just comment that out and change that to tick stock. And then we've got that get all stocks. I'm just going to do it the old way. But stocks. Actually don't need to redefine that. Now we'll just push a new stock object type. That ought to work. So now we don't care what the type is. And if we change 4 sigma to something else, that will be the thing here that becomes instantiated in past NS and S and so on. Still going to keep the shorten limit. Still going to keep the update cache here. This is where the changes make. Now, we're going to keep Pre-4S, or are we? I think I'm just going to comment all this out for right now. And maybe redo it from scratch, because what we want to have are the same functions, whether they're ticks or Pre-4S. And just have the import decide which forecast you use. Let's do if permissions and acl.ticks, because we will need ticks no matter what we do. Then we'll keep the next few lines. It's actually maybe a better way to do that as well. Let's go with that. I was thinking I would actually have short when it passes through the stock extender, replace forecast with absolute forecast, but I think that's just going to be confusing and might introduce bugs and doesn't really save us any amount of typing. Okay, now for let stock of stocks try. What are we trying here? Yeah, I think this is fine. Just st.bearish, then we'll unbuy. And it's bullish. We'll unsell. And then here's where the new code's going to happen. So we'll need to copy all of this. In fact, we'll need to grab all of that. Okay, that looks good. And then we'll copy the whole main loop. That'll become our new main loop. Except it won't be inside a for loop yet. All right, so if we've got ACL ticks, we'll sell everything that is bearish or bullish. Which is exactly what we were doing here. I guess I should do if cycle detected. And then if a tick has occurred, we've imported that. Yeah, we're pretty good here. We're setting cycle tick. Yeah, that looks great. Sorting by expected value, I love it. Anything else to copy? I don't think so. The rest is just pretty print. Okay, the last thing we'll have to do is we added a bunch of functions in stock ticks. But the 4S version doesn't have any of them. So what we want to do is make sure that anytime, well, most of the time, when there's a function that varies depending on whether we know for sure forecast, we need to give in stock ticks the definite guaranteed answer. So here we'll go and just copy, make sure to keep those values or else it'll bug out. Okay, what else changes? Need to add, no, we won't. That's not going to change at all, so we don't need to change it. It'll just, it'll inherit. We're really just looking for functions where knowing forecast and knowing volatility will change them. This all looks good. So forecast is already managed in 4S. Calc forecast, that'll need to change. And we'll just return this.forecast. That way, anytime we call a function that wants to calculate the forecast, it'll just grab the actual forecast. Perfect. Where are we? Since that's calling calc forecast, those will always be accurate. Volatility will be accurate because we are overriding it. Standard dev, that's probably fine as is. Actually, no, the standard dev would just be 0 because we'll be giving an exact value. We can keep window length, except probably our detect inversion functions will change. Maybe just has inverted will change. Let's start with expected value. Is that changing at all? Normalize prob, this, we're adding standard dev. I think that's just perfect. This volatility, actually, isn't it just going to be volatility times forecast minus 0.5? But that's exactly what it is. And this conservative prob is just a roundabout way of getting the exact same thing. So that doesn't need to change. This is a calc forecast, which means it'll always be accurate. And then has inverted. How are we going to do that? Determining if it's inverted when we know the values exactly. thinking we could do this dot last forecast. Something. Oh, how do we want to do it? We want to detect a significant change. Definitely going to use some kind of. Definitely going to have to save last forecast somewhere. But the problem I'm facing now is if I just use the last forecast, it's going to assume the last forecast, like it's got to be 10 forecasts to go. Or else some of the other code will break. Indeed. Maybe there's another way to detect an inversion. Maybe like, or I mean, maybe it's another function. Don't touch as inverted, touch detect inversions. I really don't have a good idea of how to do this. Let's see what it was before. Free near-term window prob. What is that? Okay, so that's calc forecast. So that's going to return. It's just always going to return the actual forecast. And this is always just going to return the actual forecast. So it's never actually going to tell me it's inverted if I use this function. God, I'm drawing a blank here. How about this? It matters so little, and yet I want to get it right. So if the last one was below 0.5 and the current one is greater than 0.5, or the opposite. And we'll wrap all that up in a parens and then say, and oh, we've got this constant at the top, don't we? Where did it go? Inversion detection tolerance. How would I use that? I basically want to say, and if it's bigger than inversion detection tolerance, but I don't know which way it's going. And I could use abs. Here, let's just do this. I think that'll be okay because we're looking for some critical mass of them to invert, and they should critically mass invert at the correct time. That might work, just not complicate it. Okay, what else do we got? I'll need to save last forecast. And I'll probably do that in the original one, in case I ever need it again, and we'll do it at the tick. I think we're good to go. So we're looping through the stocks and buying or selling as necessary. Oh, did I add bearish? Yeah, I've got bearish and bullish right there. And then we're checking to see if a tick has occurred. I guess we should check to see if a tick has occurred before we sell stuff. That's fine. I think I'm going to run this. See what happens. First, we're going to run it with ticks stock. Oh, I guess I do want my pretty print. Maybe not all of that, maybe just this guy. Let's try to print something. Definitely need to disable log for sleeps. Okay, so it went out and bought a bunch of stocks. Why? Why did it do that? And it's still buying them even though we're on ticks, right? We are on ticks, aren't we? Definitely should not be buying stuff this early. Where did we forget to bring something in? I'm not seeing it. 100%, there's no way it should be buying this crap. We do need to change this to expected value, perhaps. And then I'm going to come down here and I guess I will have to add in all this stuff temporarily. Oh, and also this needs to be sleep time. Now, why did it just go out and buy? Oh, it's not. This script is buying stuff. Die. Yeah, my tab crashed. Okay, so we're going to sell all our positions. Watch this one time through, make sure it's behaving normally. Then we're going to pop back in the script and go into 4 sigma data. And again, make sure everything's behaving properly. It's buying the most profitable stocks and so on. Of course, it doesn't always buy the stock with the best forecast. It buys the stock with the highest expected value, which is volatility times forecast. So a stock with a lower forecast and a better volatility will tend to make more money per minute, per hour, whatever, per tick. So it does prefer stocks with a slightly weaker forecast if they have stronger volatility, which made sense to me. I don't know if maybe there's a reason why you go for a higher forecast. If you had less money, you were starting out, you wouldn't want to lose the money in case you bet wrong, but this thing doesn't seem to bet wrong very often at all. And I mean, if you felt like adding that in, saying if I have more than $1 trillion, then use the volatility. If I have less than $1 trillion, use forecast. You could add that in. Not that big of a deal. Come on, detect a tick one time. Oh, you're kidding me. What a nightmare. All right, well, I'm going to assume it works. How about that? And if it doesn't work, I'll update it before I upload this. Let's try 4 sigma. So this is less efficient than it could be. Some of the logic has it wait until a cycle is detected. But what we could do is just detect a cycle automatically if we've got ticks 4S, because we don't need to wait. Boom, perfect. And then it went and bought 2 stocks. Let's see if they're good stocks. Why did it pick those over Netlink? Because I thought Netlink had higher volatility and it's got a higher forecast. It does. This is a fantastic stock. What in the world's wrong with this script that it would pick those two over Netlink? It's something to do with the expected value function. Oh, are you kidding me? My shit didn't save. The game crashed. Oh no. Alright, well, I'm gonna kill the video. I'll fix it. It'll work. Everything will be fine. What a nightmare this game is.